Welcome to Alpha Recap. We've got a packed 20 minutes breaking down the day's biggest market moves. Markets closed after a day of mixed signals, and the headline that dominated flows was a surprise shift in the Microsoft-OpenAI commercial arrangement. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack, from that Microsoft announcement to a record private AI round and a batch of earnings that left traders pretty selective.
Start us off with the Microsoft news. What exactly changed and how did the market react?
So, Microsoft said it will no longer pay a revenue share to OpenAI, and that was enough to prompt an immediate pullback in Microsoft's stock. It reframed how the market thinks about who actually captures the economic value from AI deployments.
Wait, really? So it wasn't about technology, it was about the money split?
Exactly. Revenue share deals tie a cloud provider's top line to the commercial success of a partner. Remove that, and you change expected revenue composition, margins, even go-to-market incentives. Analysts noted it raises questions about whether future AI income shows up as licensing fees, infrastructure consumption, or one-off settlements.
That sounds like it could ripple through valuations for other AI partnerships, right?
Right. And the other thing is, contract mechanics matter as much as technical progress. If platform economics shift, that alters how investors model recurring revenue and margin expansion.
Okay, meanwhile, private markets were on a tear today. Tell us about that huge seed round we all read about.
Ineffable Intelligence came out of stealth and raised $1.1 billion at a reported valuation of about $5.1 billion. That's seed-stage money at near late-stage multiples, which compresses the private-to-public valuation gap and signals eager limited partner demand for frontier AI exposure.
Honestly, I was a bit surprised by this one.
Yeah, that tracks. It's a double-edged sword. More capital accelerates innovation and talent aggregation, but it also raises the bar for future rounds and puts pressure on public peers around perception and multiples.
So we've got private market froth and public market contract reweights. Add mixed earnings to the mix, and it sounds like a pretty selective trading day.
Exactly. Earnings and execution dominated. Morgan Stanley pointed out that a deep market retreat looked unlikely given earnings momentum, rising capital spending, and accelerating AI adoption. But the market punished or rewarded companies based on individual signals. Verizon rallied after surprise subscriber growth despite a revenue miss. Domino's flagged weaker same-store trends. UPS's network overhaul remained an execution risk.
Quick pause. How did futures act earlier today? That geopolitical stuff around Hormuz was in the background, right?
Futures were muted in the morning. S&P futures slipped about 0.1%, while NASDAQ contracts ticked up about 0.1%. And traders navigated a heavy earnings slate, plus renewed uncertainty tied to developments in the Hormuz region. The day ended with gains concentrated in AI-related names, but headline-sensitive moves like Microsoft's announcement created short-term volatility.
Let's dig into a few specific corporate stories. Start with Verizon and Domino's. What were the takeaways?
Verizon surprised on subscribers and beat on earnings per share, which offset a revenue miss. Analysts took that as a sign the operational fixes under new management are gaining traction. Domino's, meanwhile, flagged muted domestic same-store sales and cautioned about broader demand softness. That's the kind of cyclical consumer signal that can show up across restaurant peers.
And UPS?
UPS's planned network overhaul is a binary story: higher near-term costs and disruption versus material longer-term operating leverage if they execute. So it's really an execution watch. Hit the milestones and you get the benefits. Miss them and near-term pressure persists.
Tesla also had a filing today, right?
Yes, Tesla filed to register about 304 million shares tied to Elon Musk's 2018 award. Registration is procedural, but it increases visible potential supply and can affect investor sentiment, particularly for those sensitive to share count dynamics.
Short reactions, quick bites. The Microsoft news, big deal or overblown?
Big deal for modeling partner economics, but not necessarily a knockout for the overall AI thesis.
Private funding, healthy or frothy?
A bit of both. Healthy for R&D, frothy for valuations.
Earnings day in a nutshell?
Execution mattered more than top-line narratives.
Let's talk implication buckets. How should different investor types interpret today's mix?
Long-term growth investors. Data suggests structural AI adoption remains intact, so focus on durable business model exposure, CapEx patterns, and whether AI investments translate to revenue or cost improvements. Value and income investors. Look closely at earnings quality, free cash flow, and dividend coverage, given the mixed results and big operational projects. Event-driven and momentum traders. Higher dispersion created short windows of opportunity, but headline sensitivity, think Microsoft wording or Hormuz headlines, demanded active hedging and quick exits. And governance-focused investors should watch executive awards, share registrations, and AI governance issues tied to deployments and disclosures.
What are the concrete metrics or filings to watch next week?
Watch contract economics between platforms and AI partners. Whether revenue is booked as royalties, infrastructure consumption, or one-time fees. Keep an eye on execution milestones like UPS's network timelines and Verizon's subscriber trend cadence. Monitor dilution signals, registration filings, potential secondary offerings, and vesting schedules. Track private market pricing for AI rounds, size, and valuation. And of course, macro and event catalysts. Fed commentary, the upcoming rate decision, big tech earnings, and geopolitical developments in Hormuz. Those are the real inflection points.
So, strategic takeaways. How should listeners think about positioning? Again, purely informationally.
Focus on proof points. In a landscape where narrative and cash are both flowing to AI, prioritize companies that translate AI spend into measurable revenue growth, margins, or durable cost savings. Separate pure technology exposure from contract and governance risk. Big private financings and public partnerships are supported for the ecosystem, but the contractual terms determine who captures the economics. And be ready for idiosyncratic dispersion. Morgan Stanley's view that deep pullbacks are unlikely is one input, but headline-driven repricings can and did happen today.
Final, quick summary for listeners. What should they remember from today?
1. Microsoft's revenue share change with OpenAI recalibrated how AI economics might flow between partners. 2. Private market AI activity remains torrid, highlighted by a $1.1 billion seed round, which tightens the private-public valuation gap. 3. Earnings and execution drove stock moves today, so operational proof points are more important than broad macro calls. And 4. Geopolitics and headline risk amplified volatility, so stay vigilant on catalysts.
Great. Concise and actionable context. Thanks for walking through all of that.
My pleasure. Thanks for having me.
All right, listeners. Thanks for tuning in to Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time.